Good morning, everyone. It's a pleasure to be with you this morning, and I'm glad this room is quite full after the Saturday night parties. Very happy to be with you. I'm sorry I won't have the time to stay much longer after this. I'll be back, of course. I'll be back. And, you know, I started thinking this week, oh my God, I'm going to Oxford. I might as well start thinking about something smart to tell those guys. And at least something they don't know yet, or they don't know already. And I'm sorry for you, but I haven't found anything. But I'm here because Pamela invited me. I'm here because I trust her judgment that at least I won't bore you too much in the next 15 minutes. So here I am. I'll start with a recollection of something that happened this week. I have two kids, 2- and 6-year-old. Two wonderful boys, and my 6-year-old is now in this phase of thinking about the space, you know, Star Wars, space shuttles, rockets. Last year it was dinosaurs, better this time. And you know, here we are on Friday morning, 2 days ago, reading this book on space and trying to be a bit smarter than I am, and I start telling him, you know, this may seem like a big planet to you, but when you think about it, we are on planet Earth, and it's only one of several planets revolving around the star, which is the sun, and this star is just one of many stars in our galaxy. And this galaxy is just one of many galaxies in the universe. I'm not sure we did the maths right, but I think the two of us got a sense of how small and insignificant we are in the universe and how little we know about the universe. And then you can imagine a 6-year-old brain starting firing questions at you after that book reading. And then he got me and made this killer question. Daddy, why are we on Earth? Boom. And it provided me this introduction, and so I'm thankful to him. And it reminded me how important this question is. And eventually, how everything you do in life revolves around the answer you bring to that question, right? What am I doing here? And I believe that whether you choose that superior love or random accident is a cause for your life, puts you in a different perspective towards your projection of the future, projection of people, projection of mankind. I'm only 46 years old, I say only, but I've met people who have found this answer. And what I recognize in all of them, regardless of the answer to the question that they are bringing, is peace of mind, is clarity, and is determination for action. Right? Then the second most important question to me is, after why do I live, is who am I? Right? Gnotis eoton, said the Greek. What am I liking? What do I feel like doing? What am I good at? What are my strengths? When do I really feel myself accomplished, fully myself? And I think that answering this question opens automatically to recognizing in others talents that you don't have, pushes you to teamwork, partnership, and respect for every other single human being. So when you combine those two answers to those two most important questions in your life, I think you position yourself towards people around you, you project your future, you position yourself towards your vision of mankind, and that includes your reaction to inequalities, injustice, poverty. And poverty in this world, you have a lot. I'm going to give you a few statistical data that everybody knows, but just for the sake of it. 2.3 or 2.5 billion people today in this planet live with less than $2 per day. Think about how much you spent last night, right? 1 billion people have no access to clean reliable, clean water. 1.3 billion no access to electricity. 2/3 of the kids dying in emerging markets die because of preventable diseases. 1/3 of urban population in the developing world live in slums. That's statistical, that's cold, it's terrible, but how much human suffering you have behind that, right? Now, big problems, big solutions, right? Overseas development assistance, charity, philanthropy, great, they're great, fantastic, we need more of it. But I think they have proven now to be vastly insufficient given the size, the magnitude of the issues we're facing. So as Pamela said, I'm a true believer in the role of the private sector in this fight against poverty and inequalities in this world. I believe you guys are coming at the right time. It's very exciting to know that market approach to solving poverty are now being recognized as a potentially powerful solution to the issues of the world. You know, you can look at segments of low-income population in emerging markets in developing nations as populations that should be assisted, and where philanthropy from generous hearts from the north, you know, who have pity on these poor people, should be channeled. You can also look at them, except maybe for the most destitute ones, as would-be consumers of essential goods and services, an attractive market segment that should contribute, by the way, at least it's projected, at least 40% of the world GDP growth of the next 2 decades. Then I hear people saying, JP, shocking, shocking, you are now commercializing the romantic view of generous hearts willing to give to masses of indigenous people, and now you turn those guys as people who are intelligent, active, smart producer, and avid consumers? Yeah, I do. Providing access to social housing, clean water, clean energy, healthcare, education, financial services is something that you can do on a commercial basis in this market segment today. I'm sure of it. If you have the right product, and I'm going to talk to MBA students now, if you have the right product at the right price point, with the right distribution strategy and channels, and you have talented managers able of execution, capable of execution, you have a successful, fast-growing business model, for sure, guaranteed. And you can apply that to bottom-up, early-stage growing companies that have been started from scratch. You can apply that to large corporations coming to the sector for the first time, and we see examples of both today. Now, I hear, you know, people saying, ooh, market, private sector, dangerous. Of course, market is not everything. Of course, private sector and market should be regulated. Of course, philanthropy and charity are necessary, and especially we need more for the poorest people in extreme poverty. Of course, aid is important, but if it's limited in volume, what I'm saying is that we should probably direct that help to parts of the ecosystem where the private sector has no value added or has no advantage, or is not going yet. And maybe this philanthropy and charity would be well advised to take risks the private sector is not willing to take today, thereby preparing the ground for future entry of the private sector that will then leverage hundreds of times the philanthropic efforts. Right? So what I think I see is the need for a continuum of intervention, from philanthropy to commercial investments, with each type of funding directed and focused on what it can best achieve along a continuum of business development stages. The worst mistake, I think, what we could do now in impact investing would be to use inappropriate types of funding for the wrong companies. And I believe you know that I've done some microfinance before, and people have made that mistake in microfinance before. They have used cheap money and philanthropy and then played commercial investors. But the result of that has been a crowding out of the real private sector because they ended up distorting prices, increasing valuations, and investing with wrong criteria. So in the past 15 years, and Pamela knows that, I've had the privilege to talk to very different people many times. And very often I've been confronted with remarks such as, JP, you're abusing pure people. You know, investors in your fund and you guys, you're making money on the back of the poor. Last month, just to give you an example, I was talking in Asia to someone who's a billionaire, by all means. And we had an interesting conversation, but a very strong one. And in the heat of the conversation, he called me a hypocrite. Hypocrite? Do you say that? Hypocrite. Because I was hiding behind good feelings to make money. I don't know, I was not in a good mood. I didn't like it. So I don't know, I didn't control myself, and I responded, you know what? Between the two of us, you are the hypocrite. Because during 50 years, you made money, not thinking a minute about anyone else or anything else than just you. And now that you're coming to the end of your life, you're putting a few crumbles of your huge fortune in a foundation to gain respectability and have some social impact that will not be system change anyway. He didn't like it. he didn't like it. But, believe it or not, we're now talking to see what we could do together in Asia. So you have to engage with people. Sometimes. We don't believe in trade-off between social and financial returns at Bamboo. We don't believe in that. And when people come to us because they're interested and intrigued about what we do, usually I have 30 seconds to decide which side of the story, which side of the coin I'm going to pitch them. I'll try to rehearse for you, right? So first version, and remember this romantic vision of the poor? Yeah? Okay, so at Bamboo, we're helping low-income communities, you know, poor people, dying of starvation, with no roof over their heads, you know, kids all around, get access to better lives through access to energy, you know, to school. They can send their kids to school, to housing. They can have a proper house for their family. Healthcare, whenever they're sick, they can go and see a doctor. Education, etc. And we do that, okay, through investments in companies, but, you know, we're providing this social return that's huge. And it so happens that, you know, money will come back, you'll get a decent return on it, and then guess what? You'll be able to do more of the same. Fantastic. First side of the coin, first version. The other one, a bit less romantic, but very efficient, is we are investing in private equity on a pure commercial basis in a specific target group of SMEs active in a very fast growth segment of emerging economies where hundreds of millions of potential customers are craving for the essential products and services that those SMEs produce according to well-tested business models that need scaling up. And it so happens that getting access to such products and services make their lives better. Second side of the coin. We do the same thing. You know, so depending on the person you see, you pitch one or the other, but in the end, that's what we do. People would then tell me, okay, JP, calm down, we got your dual return type thing, no arbitrage, okay. Skip the social. Tell us about the financial risk return profile of your funds. That would be typically the question of a CIO of a large pension fund, obviously. Now we're talking, okay. On the risk side, well, if your manager has some track record and experience in investing in SMEs in emerging markets, then it turns out that investing your money in their funds, investing in diversified sectors and geographies in a fast-moving segment that will contribute 40% of the world GDP growth might not be that bad an idea anyway, and certainly not riskier than you're investing in other types of private equity. Okay? On top of that, I would bet you that the covariance between the performance of different sectors and different geographies in my portfolio is probably lower than the one you see elsewhere. And on top of that, the covariance of my portfolio as a whole, as opposed to other asset classes, is quite low as well. So, you know, on a risk-adjusted basis, my funds are a good proposition. You know, you should invest in them. And of course, you know, I will only know about the returns when I realize and do my exits from my funds. And accidents can happen, and they will happen. But it's the same for every other private equity funds out there. So please invest in me. It's like, okay. I'd like to mention here a discussion I've had. I was really fortunate to have with a senior director of one of the largest sovereign wealth funds globally. Those guys are managing hundreds of billions of dollars. So here I am, tiny bamboo. Hello. I'd like to speak to you, and then I have a 20-minute, discussion. 20. Go. Do my pitch, 2-3 minutes, and then the guy surprisingly tells me, I buy your story on the dual returns. I buy the fact that you don't have to arbitrage. I buy, financial and social returns in one combination. It's like, yes, thank God, But then he said, I don't buy that you're maximizing financial return. You may have decent ones, but you're not maximizing them. Because if you do, you are going against your social objective and you're going against your philosophy, because you will be pushed to go and try for each and every single portfolio company to extract the last cent of your customer. And that's not what you want to do. So you're not maximizing the returns. Ooh. Other type of remarks we get is, okay, what about your responsibility and your responsible exits? Because, okay, JP, we can sort of think that you might be nice guys with those companies, you're on the board, you're promoting social and financial returns, but what happens when you sell? What happens when you exit those companies? The guys who buy those companies, what happens with the company? So my first answer to the person, the senior director was, if you treat badly your customers, and that's, in impact or anywhere in the markets, and you are in a competitive environment, well, your customers are not stupid and they will go away and smart competition will take you over. And those customers, remember, are not stupid. And actually, I think they are probably less stupid than in the affluent segment because their cost of opportunities, their opportunity cost is much higher and their resources are scarce. So they are intelligent customers. But so here, the important point is competition in the building of our ecosystem for impact is key. And if you don't have competition, you can have predatory behaviors. And we've seen that in microfinance, and we should not repeat that in impact as large. And then as to exits, our take on this is to say, well, if during 7 or 8 or 9 or 10 years, we prove that the business model intrinsic to the company is delivering the returns that we need, why would the buyer change and tweak the business model that has been proven for 10 years, right? So that's our bet and that's our faith. It's that over time, once we're engaging with the company, we are proving that this business model should be expanded, scaled up, but not changed or diverted. Then the same senior executive, it was a very good 20-minute conversation, by the way, said, okay, you're beginning to convince me, but frankly, I'll tell you, your private equity tool is not the appropriate one for your market. 7-year average holdings in those companies will not allow you to reap the rewards of this nascent industry. Another, boom. And he's right, I think he got a point. We are now at a stage in impact investing like we were, I think, 5 to 7 years ago in microfinance, where you have suddenly a large pool or a fast-growing pool of private capital coming, looking at the easy investments, mature, fast growth stage, tested business models, with actually, despite all the buzz, quite few investment opportunities resulting in overheated competition on a few deals, whereas what we need today is more money going to the early stage venture type businesses, right? With much more money, but we see not much flowing there. So there's a big disconnect that we knew in microfinance is repeated here, and that's something we need, I think, as a community to address, to build properly the ecosystem we want. So that's another point. And as to the early stage, he said, 7 years average maturity is too short. Well, I answered him, you're managing several hundred billions of dollars, and you're a long-term, investor, sovereign wealth fund. I'm happy to take 20-year horizon money from you and invest it. It stopped there, right? But we're getting there. We'll get there one day. I believe it. Now, he also told me, okay, I buy your track record. You've invested in microfinance, but it was one sector, and you were very focused on that one sector. That made your success because you were focused. Now you're all over the map, Jean-Philippe. I mean, I didn't bring PowerPoints, but we're in 20 plus countries, 35 investments, all the sectors possible. And he's right. We are not specialists, and we cannot be specialists today because there are just too few deals out there to have sector-specific funds. At least that was the case 5-7 years ago when we started Bamboo. Today it's slowly changing. But even if you were to specialize a fund on one sector, you will get, total assets of what, 20, 30, $50 million, and that's not enough to attract institutional investors and big investors. And it's barely enough to survive and to be sustainable as an investment manager if you don't profit from, of course, philanthropy or, disguised subsidies. But it's getting there. In the end, when all is said and done, I think the investors will vote with their feet, right? You can say whatever you want. Investors will vote with their feet, and they will have to choose for themselves whether they like to invest in your funds or in something else, whether they buy that what you're doing is actually not more risky than investing in some European government bonds or fund of hedge funds where they don't understand a thing. So they'll have to decide and vote with their feet. I think we have there an advantage. We are transparent and we bring meaning. When investors look at our portfolios, they're very easy to understand. Oh, okay, you invest equity in schools, in hospitals, in clean energy producers, in social housing. I can portray that. I understand where my money is going, and you're transparent, and I can trace the money. Yeah. So I think that's what people increasingly ask for, institutional or private. And I think that's our card that we have to play as an asset class. Now, if I look at our investor base, I think that we have some good investors, and that proves that we have an attractive, or at least the beginning of an attractive return, track record, and discourse and positioning. I won't cite names here, but we have the largest European pension fund invested. We have a sovereign wealth fund from Abu Dhabi invested. We have Swiss pension funds invested. We have Hong Kong-based, Swiss-based, very large family offices invested for $250 million. It's tiny, it's peanuts compared to the asset management world, right? But it's beginning. It's the beginning. And as Pamela said, we have now a fun team of 25 people investing all that money. It's cool. That's very, very attractive, and I think we're doing good. I mean, I'm not going to list or tell you about those companies because if I forget one, they will be jealous. But we're investing in education, in healthcare, in housing, in energy, and we see the results already 5 years after our investments. Bamboo is composed of a team, I think, of professional investment managers, but also of entrepreneurs and dreamers. And I think that each of us have understood that, in this case, the sum is more, the whole is more the sum than the sum of its parts, right? So collective action is very positive. There's a Canadian pension fund that we visited recently, and in their private equity team, they have a say between themselves. They say, alone, you go faster, but together, you go longer and further. And I very much liked it, very much liked it. I believe we are at the beginning of a revolution, and you're at the right time to benefit from it and enter into it in the way we address global poverty, in the way you guys are going to engage in professional lives, in the way we interact globally. And I'll just finish by saying that it starts with you, each of you, thinking about the two most important questions. And then once you get the solution and the answer to those two questions, will come peace of mind, clarity, and that's important, absolute absence of fear, energy, determination, and then I think you'll be a deadly weapon in the fight against poverty. Thank you.